All right, so we'll be discussing support and resistance today. I'll give you the retail way of looking at support and resistance, and I'll give you a more advanced way of looking at support and resistance. And as time goes on, there might be need for us to use both of them. It all depends on what you prefer, but I'll tell you how I use it to get the results I get. Now, support and resistance comes under the premise that price action has a memory, that buyers and sellers in the market have a memory. What that means is that if price has bounced off a place before, there's every tendency that it could repeat it. Not a certainty, it's just a tendency. Remember, Forex is probability most of the time. Now, as a way of introduction, when I say the market or when I say price, I actually mean the value of this. So remember, we said to the right-hand side of the screen, right, where you can see my cursor moving, that's the price, and beneath is time. Now, so what support and resistance does, I'll give you a small illustration before we proceed. So assume that you have a house like this. And inside this house, you have, for the want of better you have something that looks like a football. And there is somebody inside this place that is bouncing the football, right? When the football gets to the lower base, the lower part of the house, it will bounce up. When it gets to the top, it will be pushed down. So it's like the essence of throwing this football up is that you want it to break through this roof and go up. That is why you are throwing the ball up. You want it to break through the roof and go outside the house. But you will notice something, that when it gets to the top, let me use this and I'll give it a red color. Then this, I give it a blue color. Right? So it's like when the ball gets to the roof, what happens? It is rejected downwards. This roof becomes a resistance. We can also call it a ceiling if we want, right? That's like the resistance. It's resisting this ball from moving to the next level, right? Whereas this, when the ball comes to it, the ball bounces back towards its intended direction. This becomes a support, or you can call it a floor, right? So price comes here, bounces up, goes there, bounces down. We have a resistance and a support. That is a very primary way of looking at resistance and support. Now, I give you another illustration. If we now have more than one floors, if we now have more than one floor, and for one reason or the other, after hitting this ball across the ceiling, the previous resistance for a while, the ball was able to scale through and found its way and the ball found its way into the next zone, right? The ball found its way into the next zone and is now situated here. So let's take this out. So what do we see there? We would notice that it has found its way into the next phase of the building from this floor to the next floor. Now it still wants to continue its trajectory to the top. The part that was the ceiling or the resistance before will now become the support. We are done with this level. We are done with this level now. This one is done with. This former resistance will now become a support for the movement upwards, and we now have a new resistance somewhere up there, right? So in essence, resistance is something that stops price from moving up, and a support is a floor that supports price when price comes back down. It stops price from going lower, but rather want to push it upwards. That is a support and resistance in layman's language. Now, we have several types of support and resistance. The first one is exactly what I just explained, where we have horizontal support and horizontal resistance. We have them in the market. I'll give you a good example. We'll come back to Euro USD, this FXCM. Let's go to Euro NZD. We have a support and resistance playing out there now, right? You notice something here. Here we have, I can put a line here, and I can also put a line here. Are we seeing? Notice how price went up, came down, went up, and is coming down. You can safely call this place that hypothetical building that we saw at the beginning, right? And price is the ball. Went up, bounced back down, went up, bounced back down. After a while, either the ceiling, which is the top, or the resistance, which is the bottom, one of them will give way, right? So it's either price will finally pierce above or pierce beneath. One of them will certainly give way. Price cannot continue to bounce up and down forever, right? But the term I want you to have, and I want you to be very familiar with, like I said, we are going slow today so that you can understand the terms very well, is the support and resistance. Support is usually beneath, resistance is above. Support is usually beneath, resistance is above. So this area becomes the support, and above we have the resistance. For the purpose of this, I want to type it in again. So if you're watching the video, this becomes a support, right? What we call the floor. And up here, you have the resistance, right? Now, I'm going to ask a question. I want us to put answers in the chat box. When price gets to a support, traditionally, what are we expected to do? Buy or sell? When price gets to a support, traditionally, what are we expected to do? Buy or sell? Thank you so much. We are supposed to buy because we assume that price will bounce upward. So buy, right? And when price gets to a resistance, we assume it will be rejected. So it will go back to where it is coming from, and we will sell. Remember, in Forex or in any form of trading whatsoever, we make money either way, whether price goes up or down. But we have to put ourselves in a position where we would have assumed or properly assumed where price is going to go to before it actually starts going, right? So if you want to buy, you should have bought before the price start making its way up before for you to make money, right? If you want to sell, and these are some traditional ways we look at where price is going to, support or resistance. EN, and by now I want you to start getting used to the nomenclature. This is Euro NZD. For the purpose of ease, we just call it EN, right? Usually when we're looking at Forex, if it is Forex, we use the first three letters of the quote and the base currency, right? So this EUR is Euro, NZD is New Zealand dollar. So pick the first, we just say Euro NZD, Euro NZD. For purpose of this class, we can call it EN. So GU will be GBP USD. Now for EN, I am looking for reasons to want to buy, right? I'll be looking for reasons to want to buy. I don't want to go deep into the reasons. We'll come back to that later. Let's take this class one after the other. So that's an example of a horizontal support and resistance. Now, still on this EN, we could have some other form of resistance, and I want to introduce you to the next form of support and resistance. I want to introduce you to the next form of support and resistance, right? So there are times we could have, sorry, let me use a lower part of the screen. I'm looking for, all right. So there are times we could have something like this. This is not really horizontal per se, slanted somehow, right? But we could have support and resistance here where price seems to bounce up, come back down, go back up. So the difference here is that it is not horizontal like we did before, right? In this case, its price is slightly going upwards, right? It's going upwards slightly, but you will notice that it seems to be respecting what we call a channel, as if this is a channel, and price seems to be respecting that channel as it makes move up and down. So, for example, I can give you another one, right? So we could have a scenario like this, where price seems to be going up, down, up, down, right? Price just seems to be respecting an imaginary line, bouncing up and down. This was a scenario where price is going up, and to the right is a scenario where price is going down, right? So the lower part of this one is still a support, and the top part will still be a resistance. The lower part is a support, the top part is a resistance. We don't need to go too far. In EN alone, in EN alone, we go back up, we can see that example. So can you notice we have something that looks like a horizontal support and resistance here? Can you notice it? It looks like price is bouncing between these lines. Is anybody, can you see that? Is it clear? I need response so that I'll be sure we are following.
Yes, it's clear.
Oh, great, thank you. All right. So those are forms of support and resistance. Those are forms of support and resistance. If you have this, what we call this a trend line. This line I just drew now, up and down, we call it a trend line because we believe when it's slanting downwards, it's giving us a downtrend. We say a trend is down if price is making progressive movements to the downside. And we say a trend is upwards if price is making a progressive movement upwards, right? So in a downtrend like this, we sell at still the same principle. You sell at the resistance, you buy at the support. You just keep going up, down, up, down, up, down. That's what support and resistance basically is in the traditional retail term. Right now, I'll be giving you another definition for support and resistance that you wouldn't find too often out there, right? This time we're using candlesticks formation. So let's say we have progressive down candles. Just follow the illustration, you will get it. So please mute your mic, so you won't disturb. People will be listening to this after now, and you want to have a clear. Somebody's mic is on. Mr. Michael, please mute your mic. All right. Okay. If you can see on my screen, maybe let me move this to green so it tallies with what we have on my screen. So like on my screen, my red candles are my bear candle, right? By bear, I mean down candle, my selling candle. And my green candles are my bull candles. That is my buying candles. So let's say you have series of down candles, meaning that price is in a free fall. Then all of a sudden, you have a large candle, a large bullish candle. And the bullish candle engulfed, when I mean engulfed, is bigger than this smaller candle, right? It could be series of bullish candles. It could be series of bullish candles such that this one is not that big, maybe just small like this, right? But all of a sudden, you see a change in direction. I will usually prefer that the first candle engulfs the second one. I usually will prefer that, right? Then you can assume, remember everything we're saying here is theoretical, is not real. Price does not respect lines, right? Price doesn't respect a line per se, but we try to put meaning into the chaos that we see in the market. Now, so what we want to do here is that we're going to put a straight line on this bear candle, right? We'll put a straight line here. It looks like when price went down, it met a a support somewhere and bounced back, right? And how do we identify that? I want to put a line on this bearish candle that was engulfed by the bullish move. Now, I hope I'm not confusing you guys with the use of the term, right? When price is going up, we say it is bullish. When price is coming down, we say it is bearish. And those terms are gotten from the way those animals usually engage in battle. When a bull is fighting, it has two sharp horns. It tends to want to dig down, carry the opponent, and fling it upwards. That's how a bull fights. I'm sure we've seen bull fights before. They try to hook you with their horn and fling you upwards. So when something is going upward, we say it is bullish, right? We say it is bullish. Now, when a bear, which is another form of animal, wants to fight, it stands on its 2 feet and try to press down the opponent. So when something is coming down, we say it is bearish, right? So don't get confused when I use those terms. I need you to understand bullish is buying, bearish is selling. Right, so I draw a line on my bearish candle that was engulfed. When I do that, I take that line as a psychological support, right? I'm anticipating that when price comes back into this line, and not just the line, I am looking at the whole of the space between this line and the bearish candle that was engulfed. I told you won't find this in so many places, right? So rather than using a line, I want to use a zone. Rather than use a line, which is what you have when you're looking at trend lines and this, you notice that sometimes it looks like price pierces beneath the trend line, sometimes it pierces above it. You want to see a scenario where you are looking at a zone. Notice this one. Notice that price pierced beneath. You want to see a zone so that you can take your decision whether to buy or sell within this yellow zone, right? So I'll give you an example. This Euro NZD, FXCM. I'll go to Euro NZD with another broker so that if we need to refer back to this, we can always come back. Let's go to Euro NZD. Let's use forex.com. Right, so let's now see how we treat this. Right, great. Now notice we have some down candles. Can we see those down candles, those bearish candles? Then we have this bullish candle. Right, let me magnify more. Magnify it more. Notice we have some bearish candles coming down. Then all of a sudden we have this bullish candle that engulfed this bearish candle. So what did we say? We said we will box out this bearish candle. From the week to the week, I believe you know what a week is now. We'll box it up from the week to the week, and I'm going to extend this to the future. I'm extending this to the future, right? I'm extending this to the future. Now let's go upwards. We had some bullish candles moving, boom, 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 boom. Then we had a bearish candle. Then we had a bullish candle. Then we had this bearish candle that engulfed this last bullish candle, right? So I want to mark up the bullish candle that was engulfed and also push it into the future. These were bullish moves. All of a sudden, this bearish candle engulfed this bullish candle and it started making its way down, right? Now, you can see clearly that I now have a reason to buy anywhere within this zone. You notice that? You see how price respected this zone. So ladies and gentlemen, I've just given you 3 ways of looking at that term, support and resistance. I want to give you room now to ask your questions before I dig deeper. This is very pivotal to our way of trading, and I want you to ask your questions if you have any. So you have questions, 2 minutes, you can unmute yourself or raise up your hand, and will give us room to ask our questions. All right, Mr. Adekpelumi, please ask your question. Can I unmute you or you can mute yourself? Ask your question, please.
Hello, sir. Please,
Yeah.
the zone that we put into consideration, what do we use to determine the zone, or we just assume that zone?
Yeah, I just gave you, very good question. I just gave you a way of determining the zone, right? So take, for instance, all the while in Euro NZD, notice all the while Euro NZD was what? Dropping, dropping, dropping. Then it came here, you saw a bullish engulfing candle, right? Let me magnify it again so that you can see clearly. You guys are going to do some assignments and send your screenshot to me to be very sure that you're grabbing this, right? It's not all theoretical. Notice price has been coming down. I want to see price changing direction. I'll be more comfortable if I can see a bullish candle, right, that engulfs this bearish one, right? And it extends for a while. You know, by the time I see this first bullish candle, I'm not sure what is happening. And let me give you a scenario. Can we see a bullish candle here? We saw a bullish candle engulfing this bearish candle, but it just went up a little and price came back down to break this bullish candle. So it means the downtrend continues. Are we together? The downtrend continues, right? I want to see a situation where price made a sustained move, taking out a lot of points. I will explain that, but I don't want to go too deep. Let's just look at support and resistance for now. I want to see price making an extensive move to the upside, right? So this zone, when I see price making an extensive move to the upside, I now mark up this zone that, okay, when price came here, there was a massive change in direction. I'll just take note of it. I'm not doing anything with it yet, right? Then I'll come up here. Price was making progressive move to the upside. All of a sudden, we noticed that it got somewhere and changed and started coming back down, right? It denotes that this area here is serving as a ceiling, which is a resistance. So because I don't want to miss my trade and I don't want to rely on just pure lines, right? I want to pick up a zone. So how did I get the zone? I look at the last bullish candle that was engulfed. The last bullish candle that was engulfed by a bearish candle, and I mark up that zone, right? So now I have a zone below and a zone above. Then when price begins to make its way down and get to this zone, I'll begin to look for reasons to buy. It doesn't mean I'll buy automatically, because price can break it and continue down. I'll just be looking for reasons to want to buy, right? Later on, when we talk about candlestick patterns, you will see that you would have had a reason to buy here, because when price came into this place, it was rejected. When I say rejected, you notice that you see a wick, right? That is rejection. But we're not talking about that now. We're just talking about support and resistance. So anywhere within this place, I am willing to buy. So if I want to buy, this is what I will do. I'll look for a reason to buy from anywhere within this place, right? I'll put my stop loss somewhere beneath this zone, and I'll put my take profit somewhere within that zone. Look at my risk to reward. My stop loss is 85 pips. My take profit is 309 pips. This is a risk to reward ratio of 1:3.46. This makes a lot of sense. But you see, I didn't take a decision to buy until I've been able to see the first and the down zone and the up zone, and I'm now taking my reason to go long to buy from here. Right? Are you getting it now? This is under the premise that price will remember what happened in the past and respect it. And notice how price pushed. So when I get back up here, I'll be looking for reasons to want to sell. Right? Now I'm looking for reasons to want to buy. Again, when price came back to this point, I'll be looking for reasons to want to buy. It won't continue like this forever. I may most likely lose one trade when I'm buying and price suddenly goes down, or when I'm selling and price suddenly goes up. I might lose one trade, but notice the risk to reward is what matters, right? We discussed risk to reward, I think 2 days ago, and I can't remember if it was stated, why do you need a risk to reward? I remember Mr. Shola saying, if you lose, say you are risking 1% of your account, if you lose, you need to lose like 10 times or thereabout to blow out your account. I'm here to go even deeper. I am saying that if your risk to reward is 1:2, meaning that for every trade you take, if you lose, you are going in to lose 1% because you have the possibility of making 2%. If you take 5 trades and you lose 3 and you win 2, with these 3, you would have lost 3%. With these 2, you would have won 4%. You still have ended your day with 1% growth in your account, which is interesting. That's why we'll talk about risk to reward ratio, right? So let's move on. So this is this. I believe I've been able to answer your question. So you don't just assume.
Yes, sir.
You draw the red candle. The zone is that red candle that was engulfed, and the zone up is that green candle that was engulfed to the downside. Right? Let me see if there are other questions. I want you guys to really get this. Mr. Afolabi, yeah, please go ahead.
Yes, sir. Well done, sir.
Thank you, my brother.
Please, in considering the bearish or bullish engulfing candle,
yeah,
are we taking note of the weak area when the candle engulf the smallest one? Are you considering the weak?
Yes. When I'm talking, yeah, thank you so much. That's another. I love that question. It shows that you guys are really following, and I appreciate that. When you are looking at the engulfment, you only look at the body of the candle, right? But when you are marking up the zone, you mark up with the wick, right? Notice this point. This red candle engulfed. Let me magnify it even more. I want you to see it clearly. Notice that this red candle engulfed this green, the body. It didn't engulf the wick. It engulfed the body, right? But when I'm marking the zone, I'm marking it together with the wick. Notice this one. The body engulfed the body, but it didn't engulf the wick. But when I'm marking the zone, I'm marking it with the wicks, right? So that is that on this. Remember, I've just given us on only one pair. Oh, Mr. Solomon, please ask your question.
Sir, can you hear me, sir?
Yeah, I can hear you now.
So that is, you're trying to say that if we are trying to mark the support zone, we will look at the bearish wick. And if we are trying to mark the resistance zone, we look at the engulfed.
You look at the bullish candle, right?
Okay,
so I'm going to introduce another term now. Remember, I said today we might be slow. From Monday, we might be a bit fast. Then back to Thursday, we'll be slow again, right? I just want to explain the terms. I'm going to introduce another term now, and I want you to look at. Guys, what is happening to Euro NZD now? Does it look like it's buying? Look like it's buying.
It's buying now already.
It's buying, right? If we're in a live environment, we could be making some money. In fact, we would have made some money, because from this point to where it is now is about 88 pips, ladies and gentlemen. 89 pips. That could be $89. That could be $890. Right? Just understanding this thing the way I'm explaining it. Now, I said I was going to explain some other terms. But before I do that, I want to ask you, from what I've explained now, I've given you 3 ways of looking at ceilings and floors. The first one, we looked at horizontal lines. The second one, we looked at slanted lines, which we'll call channels. And the third one, we looked at zones. Zones. I want you to put in the chat box, 1 being horizontal, 2 being slanted lines, 3 mean zones. Which one do you think will give you'll be more comfortable with, so that I know what to do? Right? Which would you be more comfortable with? Put in the chat box 1 to 3. Mr. Solomon said 3. The zones. All right, thank you so much. Yes, I also prefer the zones, right? I also prefer the zones, but that doesn't mean I don't use the slanted ones. I still use the slanted ones, right? But I prefer the zones, right? Because if you use line, you would have placed your line up here, right? Waiting for price to come to it, and price didn't. If you're using line, possible you could have placed your line down here and price didn't come to it, you would have missed these 2 trades, right? But if you use zone, then you are able to see more clearly what is happening. Now, I'm going to give you before I introduce the terms I said I was going to introduce, I want to give you the theory behind these zones, right? Now, when price was falling down, there were some people in the market that felt that the price for EN was good, was cheap. Remember, we say we buy high, we buy when it is low, and we sell when it is high. We buy when the price is cheap. We go back and sell it when the price is there. There were some people, and lots of them for that matter, who felt that the price here was just right for them to buy it. So they bought from here, right? When they got here, they felt the price was high enough to sell and make some profit. So they sold. When price comes back to this place again, there's every likelihood that these people here will have enough reasons to want to do what? Buy again, right? But price is dynamic. And I'll give you an example with what is happening in Nigeria and the world at present, right? So let's say the bag of rice before was 22,000 naira. When the price drops to like 18 or 15, many people want to buy many bags because they know the price will soon go up, and they will now sell it at that point in time and make some profit, right? They could do this over and over and over and over, right? But during the time of Corona that we are in now, you discover that what was perceived to be expensive before may now be perceived to be what? Cheap. The rice that you were selling at 25 because you felt I've made some profit, you might now find out that that 25,000 will now be even a cheaper price for you. So what would you want to do at that point in time? You want to buy more and take the price even higher. Then you now go and sell at a higher point, at a higher price. You see now that we have left this zone and we have now moved to a higher what? A higher zone. Do we get the point now? All of a sudden, the whole market, the dynamics of the market will change. They will leave this zone and move to the next zone. Because you and I are retail traders, and there are about millions of people getting involved in this market, worth 6-point-something trillion. We don't know when the move will happen, right? So we only move when the market has moved. Remember, when we were here, the first time we drew this zone, we just drew it. We didn't know what was going to happen. We could have drawn this zone here. We could have drawn this zone here. But when price came and broke through it, you said, this is not a proper zone. So we'll move it. We kept moving it until we found one, right? Then price broke. We said, okay, this zone is the correct one. Then it got here and dropped. We said, okay, we'll find another zone up there. So we now have our support and we now have our resistance. We can now be trading in between these two until one of them fails, either to the upside or to the downside. We'll now move all our trading to the next zone. Now, what does this teach you? It teaches you patience. When price is moving back down or moving up, right, we need to be patient to see what will happen before we decide to now be selling or buying. You see, because if you see this bullish move and you jump in the middle, notice there was a bearish candle coming down. You could be scared because of this bearish candle and you jump out of your trade. But if you've marked up your zone up and down, when you enter for the upside, even if there is a bearish candle in between, you assume that, look, this thing is still going to go and hit the top zone. Notice when we're coming down, we had some bullish move up. We are not, if you understand how to trade these zones, you won't be so bothered about this bullish move. You'll be anticipating that price will come into this zone. And even if price pushes back up, you only have lost nothing because it just hit you where you were before, right, at your entry price. Now, let me introduce the new terms. This bearish candle that was responsible for the push up, right, is called a bullish block, right? This bearish candle is the bullish block. Even though it is bearish, we say it is a bullish block because it was from this block that the bullishness started. And the bullish candle that was responsible for this bearish move is called a bearish block, right? So here we have our bullish block, right? And here we have our bearish block. We have our bearish block. I believe we understand. So bullish block, bearish block, right? So let's summarize this. We've been able to see only on this point, we can see this, and we can see this, one form of support and resistance, and we can also see this, right? These are forms of support and resistance. Let's go to Euro USD. EUR USD. This was where we started. You also notice something here. Right? This is like a channel where price is just respecting it to the downside. And all of a sudden, we have another one where price is moving to the... I'll teach you how to draw trend lines later on, right? The rules to drawing trend lines, I'll teach you. But I just want you to see that we have them like that in the market. So what you do is you know when to buy and sell, when to buy and sell. Right, so we'll move to the next part. Let me see if anybody's asking any question first before we move to the next part. I believe I'm slow enough for today.
Yes,
All
thank
right.
you.
Mr. Kennedy, you want to ask a question? I can see your hands up. Hello, Mr. Kennedy.
Hello, sir.
Yeah, go ahead, please.
Yes, sir. Okay. Please, my question is, when you are drawing the support line and the resistance line,
Yeah.
if you are to buy, at the zone,
Yeah.
where are we going to put our stop and take profits? Is it at the support and the resistance line or before the resistance line?
You put it before.
Before, okay.
Yes. You know, we try not to be too greedy in the market. Right?
Okay.
So
okay.
I love that question. So if I am buying from here, I will want to put my take profit somewhere here. Right?
Okay.
Leave these other
Okay,
ones.
sir.
You don't know that it will ever happen. You could have just touched it and start coming down. Look at this point. Look at this one now, down here. Right? If you're
Okay, sir.
somewhere here and you make your money, right? Very good. So thank you. Now
okay,
we're
sir.
moving.
Thank you.
Yeah, welcome. We're moving to the next point now. We've been able to explain support and resistance. We've been able to explain trend lines. We've been able to explain zones. We'll move to the next part of this, which will be looking at trends, right? We discussed this briefly, I think during the free class. We'll be going a little bit deeper now, right? So in Forex, price does basically two things, right? And I'm going to draw them here. Price does three things, basically. Price is either doing this, and for this, we say price is right. So this is an uptrend. The next one is a downtrend, right? Then there are times we have something like this. Right? So the first one, we have an uptrend. The second one, we have a downtrend. This one, we call it sideways movement. This sideways movement, we say the market is consolidating, right? We say the market is consolidating. It's neither going up nor down. Can you notice that in our zone here? Can you see that in our zone? Right? It goes up, it comes back. So let's say ground zero was 0 naira and above was 5 naira. So 0, 5 naira, came back to 0, went back to 5 naira, came back to 0. Will it be going back to 5 naira? Who knows? Right? You will say price is not really moving. That is consolidation, sideways movement. And this we say is an uptrend. For this, we say it is in a downtrend. How do you identify an uptrend? You identify an uptrend when it makes consecutive highs, higher highs, and consecutive lower lows. So let's say price started here. This is a low. Then it went up and made a what? A high. Then it came back and made a low. This low, we'll call it a higher low because it's higher than this previous low, right? Let me quickly do this. So here we have a low, right? We'll have a low here. Here we have a high. Then price made, then price came back and made another low. Just that this time, this low at 0.2 is higher than this low here. So we'll call this a higher low. Then it went up and made a high. This time, this high is higher than this high. So we'll keep having like that, right? So we'll have a low, a high, a higher low, a higher high, a higher low, a higher high. We say price is moving in an uptrend. The reverse is this case for a downtrend. You have a high, a low, a lower high, a lower low, a lower high, and a lower low. Whereas for the consolidation, you simply have a low and a high, then a high, then a high, and a low and a low. I believe no confusion here. We all understand this. Everything here we have discussed just here. We've discussed here, right? So you see a high, a low, a high, a same low, same high, same low. Are we going to get the same high? That's what's happening. Whereas here we have, now let's come back here and now see if this is an uptrend or a downtrend. Let me now go back to Euro USD. Here we have clear uptrend and downtrends. All right. So we're starting from the top. It came down. It went up. It came down. It went up. It came down. Are we seeing it? You see, it came down. It went up. It came down. You can see that bullish candle that went up and it came down again. That is a sign of uptrend, right? Then it went up. Let me use a different, yeah. So here it went up, came down, went up, came down, went up. That is an uptrend. So it's easy to see in the market, right? Now I want to ask you a question. If to know whether you got what I said, I'm going a little bit deeper now. We are almost rounding up today, this morning, but I need to go a bit deeper and I want you to grab this. So I want you to tell me, what trend is this? Ladies and gentlemen, put in the chat box, what trend is this? Put it in the chat box. What trend is this? Put it in the chat box, please. Thank you. Some people are already answering. Put it in the chat box. What trend is that? Very good. I have some people saying uptrend, some people say downtrend, some people say uptrend. I love this debate. Thank you so much. Right. This was what I was trying to achieve. This we don't know yet. When price, I remember we mentioned even from day one, we need to learn patience, right? Here, we don't know what is happening yet. Price came up, came down, went up. We don't know. This thing can just stop like this and do like this, right? Or it may now come down like this. Then it becomes a downtrend, right? It could as well just go up like this. And it looks like it was a downtrend and now became an uptrend and you are confused, right? We don't say that a trend has occurred until we see low, high, lower low. We now see a lower high. We must see two lows and two high before we conclude that a trend has started. Because this thing can just come down like this and become a what? A ranging market. It can just come down and become a ranging market. You want to see this starting from point 0 to A, from A to B. You want to see that B did not take out 0, meaning there is a higher low. Then you want to see C taking out A, meaning there is a higher high. Then you can now say, okay, this is now an official uptrend. And for a downtrend, you want to see B not taking out O, then you want to see C taking out A, then you can say, okay, now the downtrend has begun. You will now be waiting for an opportunity to now trade this other one down. Right? I need you to grab that. Never conclude that a trend is upward or downward until you see two consecutive highs and lows. So these are two lows and two highs. Two highs and two lows. Then you can conclude that you now know what the trend is up to. Right? So for Euro USD, we had a push down, down, up. When we got this other three, now we now know that, okay, 2 is lower than 0. 3 is lower than 1. We are now setting that we are now in a downtrend. We will now be, somebody's mic is on, we will now be looking for opportunity to sell 4 to 5. We will now be looking for opportunity to sell 4 to 5, right? I'm just trying to give us the trend. So to this morning we discussed, somebody's mic is on. Who is that? Oyinlola, your mic is on. Kindly mute yourself. So with this, I've been able to explain a downtrend and an uptrend, and when not to assume that the trend is upward or downtrend or uptrend until you get a clear-cut reason to want to think so, right? Now notice this, we went up, down, right? Then that's the last one we're discussing now before we call it a close. So this was an up move, right? This green was up move, right? But what is happening between this point and this point? This blue line, what is happening here? This was an up move. What is this blue line denoting? What is the blue line denoting? Somebody can just answer.
Downtrend.
A downtrend, right? How would we know that we are in a downtrend, right? That's what I'm going to explain now before we move on. So I want you to follow me. I want you to follow me clearly. So we're in an uptrend before. We're going like this. We're creating consecutive highs and consecutive what? Lows. All of a sudden, we were waiting for us to have, another higher low. Is that not so? And higher high. But we now saw this one breaking this 4, right? When this point breaks 4, what is it giving us now? I want somebody to answer. Initially, we're having higher high, higher low, higher high, higher low, higher high. Now, what do we have? What do we have? No. I want you to give me the answer in terms of high, low, or low, high. Initially we started with a low, went to higher high, went to look at it again. Let me start again. Look, we started with a low, right? Then we now went to a high, which was number 1. We now went to higher low, higher high, higher low, higher high. We were anticipating higher low, but what did we now get?
Lower low.
Lower low. Thank you very much. You now got a lower low. Once you get a lower low, you are anticipating that there is a break in structure. Note that term. There is now a break in what? In structure. Because the structure should be higher high, higher low, higher high, higher low. Then all of a sudden you had a what? A break in structure. Once you get a break in structure, it is an indication that price is changing direction. So what will you be anticipating? You'll be anticipating that price will give you this and start coming downwards. Do we see that happening here? Yes. right? So we're having higher high, higher low, higher high, higher low. Then we had a high. Then look at this one. We now had this one that broke this what? Low. What we'll be anticipating? A pushback up and down and up and down and up and down. Let me stop here. Have I confused anybody today? Ask your questions. Have I confused anybody with this explanation? Please feel free to ask your question.
No, but someone just need to go and digest it very well.
Yes, that is why I say that we are going slow. And I'm very happy that we are doing this on a day you have enough time over the weekend to go and digest it. Because I've given so much within one class so that we can have ample time to cover up next week. You need to go and watch this again. We gave support and resistance up and down, support and resistance slanting. Then we gave zones where we have a bullish zone, that is a bullish block, and a bearish block. Then we went ahead to now look at trends where we have a downtrend and an uptrend. Forget about all this drawing you see me doing, right? For a downtrend, you must have consecutive lows. For an uptrend, you must have consecutive high. I'm using the term lower low, lower high, so that you and I can be at the same term when we are using the language, right? So this one I just explained now, a break in structure, was supposed to be for next week, but I felt we're on Friday. You can have ample time to go through this, right? So you have consecutive highs. Then all of a sudden, you were anticipating that you have a lower high to push up, but this point was now broken. Once it is broken, is an indication that the trend has changed bearish, and you begin to look for opportunities to what? To sell. Right? Ask your questions, last questions before we call it a wrap. Let me check the chat box. In that case, what do we do when we have to, I don't understand that question. Nnemeka, please, you can mute yourself to ask if you're not in a noisy area, or you can type your question again. Any question, please just put in chat box. We are rounding up now.
That is in bearish, I will say.
Ladies and gentlemen, does it mean we won't have training during the weekend? Yes, we're having training Mondays to Friday. Ladies and gentlemen, listen to me. This training, no, let me not say this in the recording, but any question?
I have a question, sir.
Please go ahead, Mr. Afolabi.
Thank you so much, sir, for this understanding.
Mm.
This is your zoning strategy, sir.
Which one?
But
the zoning strategy.
The zoning block.
Yeah.
In fact, I've never come across it in my life.
I told you.
10 years of trading.
I told you.
10 years of trading. But I want to ask one question.
Yeah.
Can it work in all time frame, whether lower time frame or this higher time frame, one day,
all time frame. All time frame. There is a term that I want you to know, and I'm going to type it here so that in case you don't get my pronunciation, you can see it clearly. Price. Price is fractal. What it means is that whatever price is doing in 1 month, it will do it on daily, it will do it on weekly, it will do it on 1 hour, it will do it on 1 minute. So now, if we move this thing to 15 minutes, if we move what we have now, let me remove all the drawings. If we go down to 15 minutes, it's just that 15 minutes is more noisy, but you definitely see the same thing we're talking about, right? It's going to be an uptrend here, right? You can see that. You can see consolidation.
Yes.
Here, a zone, up, down. But I would rather you trade this on a higher time frame, right? We'll be giving you what this strategy we're teaching you, right? Let me just say it in record. I didn't want to say it before. This strategy we're teaching you, forget about what you've learned in the first 4 days. You are supposed to pay specially for that one. Number one, introduction. But this strategy you are learning now, I charge $500 for only 3 sessions to teach it. This zoning and something you are learning, right? And that's why we say this is a gift to humanity during the lockdown. So when we come back next time, we'll go deeper. But I just want you, please, we went slow. Now, I'll beg of us, take this weekend to digest what we've discussed. It's not be good of us if next week, when we are trying to move fast so that I can cover more before the training session is over, that somebody will be drawing us back that I don't understand what you mean by zone. So we have 3 days or thereabouts to digest this. We'll still be coming back in the evening to look at this again. We'll still play part of this again. Right, so yes, you can use it on every time frame. Every time frame.
Thank you.
You're welcome, sir. This is Euro USD on the daily. This is Euro USD on the what? On the daily, right? Notice this candle engulfing this one. What do? We will block this zone. When price came back into that zone, what did it do? It fell, right? Notice price push up and engulf this one. We'll block this zone. When price came back the next time into it, what did it do? It went up, even if it didn't go up too far, but it went up, right? This small push up here on the daily is 82 pips, right? So that's basically what it's all about, right? So I believe I have no more question. Yeah, all the trainings and I'm going to send the video to this training up. So thank you so much. Let me stop recording now.